Dow component Home Depot out with earnings this morning. The home improvement retailer actually reported quarterly earnings of $3.18 a share. That was much better than the Street's estimate of $3.06 a share. Revenue also beat the Street's forecast, and comp store sales increased by a greater than expected, drum roll for this, 24.1%. 24.1% on comp store sales. That is unheard of. For immediate reaction to Home Depot's earnings, let's bring in Brian Nagel. He is an analyst at Oppenheimer and Company. And Brian, this was better than just about any number on every metric that you're looking at, and yet the stock's still down by about 1.2%. Why do you think that is?
Oh, good morning. Look, exactly right, Becky. I mean, this was another what I call blowout quarter for Home Depot, and very similar to what we saw in the second quarter. I mean, these comps, like you said, of call it 25% domestically, are absolutely amazing for a company of this size. Now, I think to answer your question why the stock is down, and look, this is my, I recently downgraded Home Depot on this concern that it's kind of, okay, what's next? Hopefully this COVID pandemic will subside rather quickly, especially with some of these vaccine news we're getting. The concern I think the market's starting to have, the concern I'm starting to have is what 2021 looks like for Home Depot as we start to lap these amazing sales gains in 2020.
So what have you done for me lately? That's the common refrain on Wall Street for things like this. But, Brian, these numbers are phenomenal. I will say one of the headlines on this is that the company says that it's going to be investing $1 billion in annualized permanent compensation enhancements for the frontline hourly associates. So even after COVID goes away and potentially after the sales come down, the company is going to be taking care of the associates that helped it through this incredible time where it was servicing needs through a crazy pandemic. I mean, I think that's laudable, but you think maybe that's why the stock's under some pressure?
Maybe. I mean, look, I'd say I think, first off, it's the absolute right thing to do. Home Depot very much takes care of its people, and I think it's the right thing to do. And it's another, this is a theme we're seeing in retail, and, I think it's very clear that coming out of this pandemic, it will be more expensive to operate as a retailer. So labor expenses will be higher. There'll be more, cleaning costs and et cetera in the stores. I think this is just one more indication of that. But to answer your question, I don't think that, that may be a reason for the weakness in the stock pre-market, but I think it's more, okay, now where do we go from here?
Yeah, and I'm with you. It's the right thing to do. They are taking care of their employees. And Craig Menear, the chairman and CEO, says the reason that they're doing this, they want to lean into these investments because they think they're critical in enabling market share growth in any economic environment. They just say their people are on the front lines and they should be rewarded for that. You said you recently downgraded the stock. Dana Telsey just came out and upgraded the stock this morning before the earnings came out to an outperform from market perform. She says this is because of the HD acquisition that they announced yesterday. She's looking at that and thinks because of this, it's going to be assuming about a 3% earnings per share boost. If you look at synergies of around 5%, she says it'll be accretive to earnings next year, and she thinks that's enough for her to actually upgrade.
Well, look, I've known Dana for a long time. I have a lot of respect for her. I disagree with her call. I think as Joe, you were saying in your last segment, I think this purchase of HD Supply is very interesting, particularly given the history. I mean, this company was essentially formed and incubated by Home Depot, a decade and a half ago. I get what they're doing. If they're now in a much better position. Home Depot is much better run today than the company was 10 to 15 years ago. So I think they're much better situated, so to say, to operate a company like Home Depot Supply. But let's be honest, it's small. The Home Depot called sales of $110 billion, HD Supply $6 billion. I mean, this is a very, very small addition to the Home Depot enterprise. And again, I want to make sure, because I've been saying this to our clients a lot. I've got concerns with Home Depot over the next few quarters. This is an extraordinarily well-run company. I think once we get past this comparison issue, this potential pull forward in demand, I would once again turn very positive on Home Depot, but not because of Home Depot Supply, because of the underlying retail business and what they mean in the DIY and DIFM markets.
Home Depot, you downgraded to what?
Well, we would call it perform, which is the equivalent of kind of a neutral or a hold rating. Now, I kept my $305, or actually, the price target's $305, so we still see the potential for some upside near term. But I've also established what I consider a downside target of $220 to $230. And with that, basically, at that price, not to get too cute with this, right? But at that price, I would think these concerns I'm talking about are then priced into the stock, at which point it becomes attractive on the long side.
Shepard Smith here. Thanks for watching CNBC on YouTube.